Yep.
Awesome. So we're gonna quickly go over the the packet here, just to get a brief refresher, right? Um, we went over structure, we went over fair value gaps. Um, do you have any questions on structure or fair value gaps so far?
No, I don't believe so. I guess there's one when we see a fair value gap, it doesn't necessarily mean it's important. Like not every single one.
Not
Fair to
every
say.
single one, yeah. So I'll show you which ones that I typically look for, right? Um, let's say like for an example right here, how many fair value gaps do we see? We see one here, we see one here, and we see one here, right? So we have three fair value gaps to choose from. But how do we choose the right one, right? This is where the range tool comes in handy. So we always draw a range from the swing high to swing low or swing low to swing high, right? If we're looking for sells, we're always going to be drawing a range from swing high to the swing low, right? Now, what this tells me, right, is that I'm going to change the template on this real quick. So, you see I drew my range from this high to this low here, right? And
Yeah.
as you can see, we have a 50% level. So right here is a mid level from this low or this high to this low, right? And if market wants to keep pushing lower, we should be coming back up to the 50%, right? So let's see which fair value gap is at or above 50%. Is it this one?
No, it'd be the second one.
No, exactly. So this is how we can choose the correct fib. So it'll be, or not fib, FEG, right? So it'll be this one and potentially this one too, even, right? So these two are valid, this one is not. So that's kind of how you can tell. Um,
Mhm.
and also, like, let's say for an example, uh, we're coming up bullish, yeah? Now, uh, notice how this one didn't get hit, this one didn't get hit, but this one got hit. Do you see how like this one, these two weren't respected?
They weren't tested. Yeah, they weren't tested.
Yeah, exactly. This one was tested, right? So
Hmm.
uh sometimes, right, if price is very bullish, in this case like this, I like to use the nearest fair value gap to the price. So in this case, right, if we're looking at price like this, if we're looking at price like this, okay, we confirm CISD, we confirm large break of structure to the upside. Now, price might just um, continue to the upside, at this rate. So we choose the nearest fair value gap relative to price, and we enter off that fair value gap, right? And then, yeah,
Okay. And so that respects it because it doesn't close below it.
exactly. You see how we didn't close below it?
Hmm. So closing inside is all right.
Yeah,
We just
closing
don't want to
inside is
close.
perfectly fine. It could even wick down like this, you know? It could even
Yeah.
wick down like this, but that's still fine because we're still closing within structure, within the gray box here, So it tells me that
Mhm.
bullish structure is still intact and we're ready to push up, right? Um, now, the main part of my thing is that I always look for liquidity sweep, inversion, and CISD. Those are the three main things that I typically look for in order for me to actually consider a trade, right? Let's say for an example, you see this fair value gap.
Right.
Now we disrespected it, right? We came down and
Hmm.
closed beneath. So uh what does this turn into? So it
First
uh inverse, exactly,
inverse.
exactly. So at first this area is supposed to be bullish. We're supposed to go like this, right? but instead we just completely disrespected and closed below the gap. So this becomes our inversion. Now what do we do, right? We wait for all the other confirmation, right? So inversion is completed. What about this? This is CISD, right? So do you get why this is my CISD?
Is it because it's the last, or it's you have all the greens expanding up, and it's the one right before
Exactly. It's the first
expanded up.
green candle that manipulated the highs, right? That expanded
Hmm.
up and then came down close beneath the level. So this confirms a change in state of delivery. It's now it was going bullish, but now it's going bearish, right? The structure has shifted. So now what can we do? I said my bread and butter was inversion plus CISD, right? And the last thing we can look for is a swing formation, you know? I'm sure you and Adrian kind of went over what swing was, right?
Yeah, with candle 1, 2, and 3.
Yeah, so what is this right here? A swing, right? C1, C2, right? And then same thing right here. If we go, this is, keep in mind this is 1 minute time frame. Um, but if we were to go to NQ for an example, so go to the hourly, yeah. Um, Same thing, right? We had an SMT at the lows. Now, why is this an SMT? Do you see why?
Yeah, there's a crack in correlation.
Exactly. There's a cracking correlation in price. See? With ES.
Hmm.
ES took the lows here, whereas NQ never did, right?
Hmm.
So this tells me that there's a reversal coming, right? So once the SMT is confirmed, what do we wait for? All the other stuff, right? In this
Hmm.
case, we have hourly CISD to the upside. So uh, there's that. And then what do we have right around New York session? We have a good swing formation, right? Now let's go to 15 minutes just to kind of see a little better. Um, think of the market, right? So you remember when I went over. You remember when I went over like all these like examples here? Or did we go over these?
We, I think we touched on a few. We
Uh,
didn't get to very many of them.
okay. So you see how most cases, right? If we don't see the Asia accumulation or Asia box or Asia session, we can't really like tell, right? But in this case, we can clearly tell that okay, we swept Asia high. Now we're coming to down sweep Asia low, right? Asia box created, Asia low was swept, Asia high was swept. So it's very you can kind of tell like which areas needs to be swept and which areas uh are not swept, right? Um but
Yeah. I still need help with the Adrian explained it to me by the times, but it's hard for me still to see on the chart where Asia, London, and then the New York sessions are.
there's an indicator that well for me specifically, I just like have the Asia session marked out
Hmm.
because I know which times the other sessions are at, but realistically, bro, I think you should get this indicator that Adrian uses, which I personally don't use, but it's very helpful to see other sessions. Uh, I
Do you know what it's
believe
called?
I believe it's ICT. I'll ask Adrian later. Um,
Okay.
but
Yeah,
yeah,
because we got my chart set up with the little tool thing down at the bottom. The only thing I don't have are the indicators.
yeah, we'll get the indicators set up because it's very easy to see the timing as soon as you have the indicators on. But
Hmm.
basically, uh, consider this shaded purple box as my Asia session, right?
Okay.
Yeah. So, but all it is that I'm waiting for either highs of the purple box or the lows of the purple box to be swept, right? In this case, what do? We swept purple high, and then we swept purple low, and then what do? We just came up, right? So
Right.
it's very simple to follow. But let's say this wasn't Asia section, right? This is just a accumulation area. So what I mean by that is that
Like consolidation.
exactly, and market uh works in uh works in one way that I'm gonna show you, and it's called accumulation, manipulation, distribution, and this is what a swing formation is. Um, and I'll kind of show you what I'm talking about. So let's say for an example, this was my accumulation area, okay? And then this is my manipulation. See how I manipulated the high? We swept the high here.
Hmm.
And then what can we expect after? Uh
Well, since we swept the high, it's gonna want to go down.
yeah,
Is that
exactly.
fair?
The distribution phase. So to color code it, I'll just kind of so we have our accumulation, right? We have our manipulation, and then we have our distribution, right? Um, it's very you're gonna see this a lot, right? Same thing here. Consider this as our accumulation, right? Consider this as our manipulation, which is C2, right?
Right.
And then this is our distribution up, basically. So play around and see which areas are areas of consolidation. And once you see that manipulation, you can anticipate a reversal, right? Um, but that's literally how the swing forms, right? If we were to look at this price action on a higher time frame, this would be C1, C2, C3, C1, C2, C3. Um, so I'm gonna quickly show you like what I mean by here. So we confirmed SMT at the lows with ES, right? And then what do we confirm? We have confirmed CIC to the upside on the hourly time frame, right?
And that just to double check, that line is on that first bearish candle,
Yeah,
correct?
yeah, yeah. First bearish candle, yes,
Okay.
sir.
Okay.
Shit. Yeah, exactly. First bearish candle, and then once we confirm CISD by closing above here, um, we had another A and V setup on the lower time frame
And the confirmation for the CISD is to close above or
above.
close within it
Yeah,
above.
close above. If
Okay.
we're bullish, right, we want to close above. If we're bearish, we would close below, right? Um,
Give me a second to write that down.
yeah, you're good.
You said bearish, you want to close above.
Bearish,
Bullish, close below.
if the market direction is going bearish, we want to be closing below the CISD, and then wait for the retest of the CISD afterwards. And then vice versa for bullish scenario. If the market direction is bullish, if we're buying up, then we want to be closing above the CISD and then come back down to retest that CISD after we close above. So that way we have the confirmation. Okay, price is balanced. Now we're ready to go up, right? Can you see this?
Give me just a second.
Yeah, take your time.
Okay, I see now.
Okay, perfect. So this is down to the 5 minute time frame here,
Mhm,
and as you can see, we have, what is this? A liquidity built up, right?
mhm,
So what can we consider this as? This whole area, you know, it's consolidation, right?
mhm,
Well, realistically, we can consider this whole area to be consolidation, but for the sake of like clean chart, I'm just gonna put accumulation like this. And then what do we have here? The manipulation, right?
mhm. Manipulation up,
So, or manipulation down. We manipulate
down.
these lows. Yeah. Well,
Okay.
realistically, we manipulate both highs and lows, right? So
Mhm, yeah.
we manipulate these highs and then we manipulate these lows, right?
Mhm,
So once we manipulate the high, we came down and then swept these lows. Um, and then what do we do? It's the same thing on the lower time frame. We have our CISD, right? Clear as day, right? Can you see, bro? Dylan?
Oh, yeah, my fault. My mic was on mute.
Oh, you're good.
Yeah, so that's the CISD because that's the first bearish candle. And then as we keep going, we close where we break the structure.
Yeah, exactly. We broke structure to the upside here by closing above, right? So that
Mhm.
confirms that uh we have bullish intent, right? Um,
Gosh, okay, so so if we have a bearish candle, we close above, that is kind of insinuating that we're gonna push bullish.
exactly, exactly,
Okay,
exactly. So if we
gotcha.
close above this black candle here, which is what we did with this green candle, this is
Mhm,
insinuating that we're going up. We're
gotcha.
anticipating that price may, right, um, you know,
Mhm,
play around in this area and then start pushing back up, which is exactly what happened. Um, but keep in mind, this is all coming off the higher time frame on the hourly chart, right? Because what do we do on the hourly? We had our SMT confirmed. We had our hourly CIC confirmed, yeah. And then apart from all these little inversions that we uh like, if we were to draw our hourly inversion here, look, you see how we tapped into it here? Like we
yeah,
closed above and then we came back down, tapped into it. So this could have been an entry. But let's say like you were being conservative, you were like, okay, let me wait for hourly CSC at least, which is what happened here. Then you would go down to lower time frame, right? In this case, 5 minute, but sometimes you can go to 30, 15. Um, but I chose 5, right? And like you said, we swept the high first, and then what do? We swept the low. So uh the accumulation process is already good. Same with the manipulation process, right? So now what's there left?
distribution.
Exactly. So what is this in swing formation, right?
Hmm.
So C1, C2, C3. Um now, yeah, it's literally just the same thing, right? Once you uh go down from higher time frame to lower time frame, it's the same thing. You're gonna repeat the same process. Like you want to draw your liquidity sweep, you want to draw your manipulations, right? You want to draw your CISDs, your inversions on a lower time frame. And then look what happened. You see my inversion here. So
Hmm.
we confirm CISD, and then we confirm inversion, right? So what basically had happened was we came down, swept the low, confirm CISD, confirm inversion, and then what price needed to do was retrace down into the inversion.
Hmm. And the inversion is when it disrespects and goes through the
Yeah,
original
look,
fair.
exactly.
Okay.
Because look, this bearish fair value gap, what is it actually supposed to do? We're supposed to go like this, and then hit this, and then go down like this, right?
Right.
But instead, what do? We came, and then we made a V shape, and then we started pushing right back up after stripping this low. And so uh, this fair value gap turned from bearish fair value gap to now an inverted fair value gap. So now it's a buy zone instead of a sell zone, right? So
Got you.
uh, what happened was is we confirmed CIC and inversion, came back down, retested the inversion one more time, created another swing, and it just skyrocketed. So yeah,
Got you. So there was correct me if I'm wrong. There was two confirmations in that it was going to go up. There
well
was the
technically
inversion.
three: sweep
Three.
of liquidity,
Hmm.
inversion, and then CISD. Now this is
Got you.
on a 5 minute time frame. If we go on an hourly time frame, there's more confirmations, right? Which is the SMT low and the hourly CISD. So all in all, we're looking at about five different types of confirmation, including the higher time frame on the hourly, down to the 5 minute lower time frame, right? Oh, and I forgot about this inversion too, so that technically six. But the more you analyze, more confirmations you will find because price is fractal. If you're on the correct side of the market, you will see all the evidence supporting that bias as you go into different time frames, and that's gonna help you support and build your idea to okay, like let me wait for this, let me wait for this, and if I confirm this, then I'm gonna enter, right? And that's exactly what we do every day. It's like every day is a new puzzle piece, and then we try to see and match different time frames, and if the confluences are matching, and then you have a higher probable chance of that trade of hitting your TP. And so yeah, it's if does that make sense, bro? Hello?
Yeah.
All right,
Sorry,
cool.
I'm just writing stuff down.
Oh yeah, you're good. I'm recording this too, so we can always refer back to it.
I got you.
Um, I took this by Friday, and I'll kind of go over why I took it.
Hmm.
So if we go to ES, no, was it YM? Uh, so there was a PSP, a cracker correlation. You see how so my left side is NQ and my right side is YM, which is Dow Jones, yeah. And notice how the structure came below like this. Do you see?
Hmm.
It's kind of slanted downwards, yeah.
Yeah.
What about this?
Slanted up.
Exactly. So this is another cracking correlation. It's called PSP. It's when candles are the closure of the candles are different in the correlating acids. So NQ and YM, we made a cracking correlation, and so uh, that was like another main reason to look for buys. But
So were you saying in that example that ES and YM are the same and NQ is the crack?
yeah, ES and NQ is the same, and YM is a crack. Exactly,
Okay.
exactly,
So
exactly.
so did you trade YM?
No, I traded NQ because you can trade the crack, but all in all, when SMTs are confirmed, all three correlating assets should move in same direction. You know what I mean?
Right. Right. Yeah, I think I had that question with Adrian, and he said that they would all tech you could technically trade all of them, just the one that is cracked will happen faster.
Yeah, because it sure did, right? You see how it went up much heavier than NQ.
Yeah.
I mean,
Right.
it still was the same move, but it's like NK had a deeper retracement, whereas YM kind of like pushed up heavy. So
Had
yeah,
a running start.
yeah, exactly. Um, so you know, I took buys, somewhere around like after 9:30 manipulation, right? But keep in mind, right before the manipulation, what do we have here? We have just about equal highs, relative equal highs, right? I would consider this as equal highs, honestly.
Hmm.
So what are people gonna do on the third touch? Everybody and their grandma selling, you know what I mean? And
Hmm.
this is our liquidity target. This is our target for the day. So once we confirmed liquidity sweep by this manipulation down, right at 9:30 manipulation down, swept the liquidity. What do we create here? Swing formation, right?
Hmm.
C1, C2, C3, C4. And then I was on the 1 minute time frame, and then I had entered.
So do
Uh,
you recommend entering on a lower time frame?
if, for precision entries, yeah.
Okay.
But like as far as doing analysis, uh, you want to do your analysis on a high time frame.
Okay.
Um, but as far as like entry wise, yeah, you can enter on 3 minute, 5 minute. Sometimes I do 3 minute, 5 minute, but uh, I would say most cases I do 1 minute just so I can get that precision entry.
Okay.
Um,
I have a question about your format. How do you make your time look like that?
what this down here?
Yeah.
Uh, it's like you zoom in and it changes.
Is it in your settings? Because mine just has the numbers. It doesn't have the AM, PM.
Oh, try changing your settings to this maybe. See if that works.
Uh,
Is it the same?
go to scales and lines. What does yours look like? Oh, you have it on 12 hours. I like the 12 hours better.
Okay, cool.
Okay, yeah, that looks a lot better.
Awesome, awesome, awesome. So
Okay, yeah, I
yeah,
was getting used with the military time and it was just numbers, and I was like, I'm not used to that.
yeah. Adrian uses the military time. I personally like to use this time, so I just like okay, I know exactly what it is.
Right.
um, but yeah, same thing here, right? What do? We had a 1 minute internal liquidity sweep. You see how we swept this 1 minute low here,
Hmm.
and then what do? We come from CIC to the upside, right? Now, keep in
Right.
mind, this is coming after the fact that we're sweeping a higher time from liquidity. You know what I mean? So we
From
swept this
earlier in
high.
the day.
Exactly. So this was a Friday, 3 a.m., London low. And then right here is right after 9:30, equity is open. We manipulate the low, and then now we're just waiting to see confirmation to buy up, essentially, right? And then
Hmm.
this move happened. So we come from CIST, and then what happens? We just skyrocket basically.
Right.
So, somewhere around here is when I entered, stop loss there,
How do,
and
how
then
do you use the stop loss and I stop?
stop loss. This is a long position and short position. So if I want to sell, then I would have like a sell position something like this. Let's say I entered here. This is my stop loss. So you see this risk to reward ratio number moving.
Hmm.
So the higher my stop loss is, the less risk to reward ratio I have.
And this is for sell.
Yeah, this is for sale. So
Okay. Which is a short.
yeah, and this is literally like just a tool, like a visualization tool. It's nothing special.
Okay. It doesn't automatically take you out.
This is literally like I'm manually doing this. You know what I mean? Like I'm manually like putting it on the screen so I know exactly what my stop loss is at. But like as far as like entering and exiting positions, this has nothing to do with it.
Okay.
Yeah, this is purely for visualization. It's like, okay, I know where
Gotcha.
my entry is, I know where my stop loss is, I know where I'm gonna take my uh TP down to. You know what I mean?
Mhm.
So just think of it as a tool to kind of help you see better. You know.
Okay.
Um, but yeah, it's nothing special, bro. Um, but yeah, does that make sense? Kind of like how I'm like
Yeah.
framing my trades from the higher time frame down to a lower time frame and stuff like that.
Yeah.
Now, if we go,
So where do you start your analyzing? Do you start analyzing on the day and work down?
well, realistically, you want to start from monthly, but like I don't look at monthly every day. I look at daily every day. To
Right.
see the daily closures. So in this case, like the other day, right? Oh, the other day when price was like this, I was anticipating, okay, what do we do? Okay, first of all, we had a fair value gap, right?
Mhm.
And then what do we do? The very next day when it was created, we tapped into it and then we had a huge reaction. Tapped in this, swept these lows and hit this fair
Mhm.
value gap. So in my mind, okay, now that we have C1 and C2, the very next day could be C3, wick here and then, kind of have a bearish day. You know what I mean?
Mhm.
So that's kind of how we can anticipate, like, off the daily, like, what could happen potentially. And then we go down to a 4 hour to kind of like frame our trades better, right? So we have a 4 hour fair value gap created. See, we tapped into it. So
Mhm.
once we tapped into it, is where you want to be looking for your entry, potential entry, right? So let's go down to 1 hour just so. So yeah, somewhere around here within this candle is where you would be looking to enter. So let's go down to 15-minute. Now keep in mind the timing too, right? What is the 9:30 open? 9:30 open. We're manipulating the highs. 9:30 manipulation to the high, right? To
Mhm.
all this low resistance liquidity. What I mean by low resistance is price is very like it's weak. It's just like going like this. You know what I mean?
Mhm.
This is strong, right? You see large candles. This is very weak price. Meaning weak price means liquidity is being built up. It's consolidating. It's going sideways. So
Right.
9:30 open, like I said, we had a manipulation to the high, and then around 10:30 is when we uh started showing sign of reversal. So right here, we already come from 5-minute CISD, and you see how this candle tapped into it with the wick.
Mhm.
So essentially, right? Let's say on the 1 minute, just to be a little bit more. 1 minute is still the same. Okay, let's say like this is our 5-minute CST, but this is our 1 minute CST, right?
Mhm.
Do we tap into it? Yes, we do. Stop loss at the high. And where can we target? So in this case, I would like to have a fib out, and usually I want to target the 50% of the range from the low to the high. So in this case, 50% of my range is here. So, but
Do
also,
you
you want
do
to
you do
be,
the range off the day?
what's up?
Do you do your range off of the day? Like
Uh,
the
Not off the date, off. I do my ranges off the structure. So this is my structure low to the high. But I typically want to aim for like 1 to 2 also. So that way, this is kind of a bad entry. We should have entered up here. Um, so I'm just gonna delete this and then just kind of give you a better idea of a good entry. Uh, so like I said, 5-minute CST was already confirmed. Now we're
Mhm.
waiting for 1 minute CST, but again, 1 minute already confirmed inversion, right? We already inverted this 1 minute gap here. And then what else do? We sweep this high. We sweep this high, come down, invert the gap, and now we're coming back up for a retest, right? And
Mm-hmm.
so let's say we sold here, stop loss just at the high. And this is when you can, get your short position tool out and then kind of see, okay, if my stop loss is here and then I aim for this low, I'll get 2R, right? But let's
Mm-hmm.
say like off the, range, I want to aim for the 50% of the range, that would give me 3.5 R. If I risk 121, you know, 121 times 3.5 is what I'm gonna be gaining on this trade. Um,
Gotcha.
and so what's gonna happen? Let's see. Boom, TP hit just like that. Make
Mm-hmm.
sense?
Mm-hmm.
Uh, yeah, look at that, man.
So that was it consolidating again, and then it went down and swept the low.
Uh, it it uh
Like after that,
yeah
right in there.
yeah it just started consolidating and then it finally swept the low and then continued lower. Yep,
Okay.
that's exactly what happened. And keep in mind this is like Wednesday, last week.
Mm-hmm.
But yeah, man, kind of makes sense on how I like or how I'm framing my trades, right?
Mm-hmm.
Awesome, awesome. You have any questions so far?
Yeah, the when you select your ranges,
Okay.
is it the low and the high of the day, or are you looking at
Well,
like within the day, or is it
you
like
want
how
to
do you choose?
you can have multiple ranges, depending on the scenario, right? So let's say like this is a Tuesday high, right? And then this is
Mm-hmm.
a Tuesday low, right?
Mm-hmm.
It's still the same thing, right? I have a swing high and a swing low created, and now keep in mind this is previous day range. This is yesterday price action. Today is Wednesday. This is Tuesday, so this is yesterday, right?
Mm-hmm.
So Tuesday we have a range created, and then right here is our 50%, right? And then what
Right.
what, what happens? We create that range, we consolidate it a little bit, comes back up, taps back into the that above that 50% range, sweeps this high, right? Creates a swing and then start dumping.
Mm-hmm.
Yeah. So um does that kind of answer your question there?
Yeah. Yeah. So it's well a little so figure this out. I think so. So if we're looking at Wednesday, we start our lower range at that one down there with the line, and then our upper end range is at the zero. Is that correct?
Yeah. So um the range uh it doesn't really matter as long as you're using that, just, 50%. But sometimes,
Mm-hmm.
I like to use Fibonacci levels, right? So like let's
Mm-hmm.
say like I have these levels, marked out. You see how price came back up and hit the 62 level here and I started dumping. So it's you
Mm-hmm.
kind of have like a more precision like area to look for. Okay, like if we hit 62 and have a rejection, then I'm gonna be selling. You know what I mean? Kind of like that. And I'll show you some different examples here. Let's say like I'm drawing my range from this low to this high. Yeah.
Mm-hmm.
So what happens? We hit the 62 again, and then we start pushing up. See what I'm saying?
Gotcha.
And then
Yeah. So I guess what I'm getting confused is how to know which range to pick.
swing low to swing high. So
Okay.
uh maybe this could be better. You see, swing low, to swing high. See that?
Yeah. Yeah.
Yeah. So you want to be drawing from the swing low to the swing high. Boom, just like that. And then see
Gotcha.
how we hit the 50 and then start pushing up. Yeah.
Mm-hmm.
And I'll show you a couple more examples like that, so you have an idea how to use this better. Um, so same thing, right? If you have trouble, just use the line chart. So we have a swing low, swing high, right? Swing
Mm-hmm.
low, swing high. Now, if you want to
Gotcha.
make it a little bit precision, to do it from wick to wick, just like this, and then what happens? Uh, we have a low to the high created, price consolidates, hits the 72 level this time, and then start skyrocketing. Make sense? Now, we're going to use that along with everything else that we know, which is CISD for value gap, liquidity sweep, yeah, order blocks.
Mhm.
Like, look at this liquidity sweep, right?
Mhm.
What about this? Order block, right? So, if we can combine these tools with along with everything else we know, we can have more precision entry. Because trading is game of probability. The more confluence, the more confirmation or evidence you have supporting your bias,
Mhm.
is gonna make your trade more probable.
Right.
Um, but yeah, just mess around with it. You're gonna see a lot of different results, but it's good. You're back testing.
Mhm.
Um, but yeah, like say for an example, like here, okay, we swept the low, and then we create a range from the low to the high, right? From this low
Mhm.
to this high. And then what happens price? We hit the 50 and then skyrocket. Make sense? It's very simple,
Yeah.
bro. Very simple. Don't overcomplicate things. Same thing here. After a range was created, we create a new range. So we mark from this low to this to the swing high here to this one. And then what happens? Price comes back down to 74 level or 72, 79-ish level, creates a swing
Mhm.
and then skyrocket.
Got you.
So just keep playing around with the ranges and
Mhm.
see which ranges make sense, right?
Mhm.
So from the swing low to swing high, right? Swing low to the swing high. Comes back down to 50, skyrockets. Very, very simple. Um,
So if you were to say all the tools that we use to check, if you were to put them in a checklist of like this, how would that look? Like what do you what is your method? Do you do one thing first always and then kind of in a certain order?
uh, they're not necessarily in order, brother, but typically, right? Your ranges are gonna be drawn first. Your liquidity sweeps are gonna be drawn, first. And then later on, once you see more confirmation, you might see, okay, we're rejecting off the order block. We create a inversion fair value gap, we create a CSD. Those comes kind of later on when you're getting towards your entry points. But like when you're doing analysis, you want to be drawing your ranges, you want to be drawing your liquidity points. Yeah. So those I would say would come first, right? So like
Hmm.
um you know your high time frame analysis comes first, and that like I said, that's where you can kind of see your range, high time frame range, see if we're coming out from a previous daily range, so like the example I showed you, like here, like we have our Tuesday range here, and then what do we do Wednesday? We just came back up and hit the premium of uh previous daily range, which is above the 50%, and then we swept the liquidity, created the swing, right? And did all the things that we wanted to see on the lower time frame, and then started pushing back down towards the liquidity. And so as far as checklist goes, like I said, bro, you always want to start from higher time frame down to lower time frame, but along the ways you will encounter different displacements, such as, like I said, order block for value inversion, and things like that. Uh, you're gonna want to match that based off your bias for the current day. So if you're looking for buys, you want to be looking for bullish order blocks, bullish for value gaps, you know, and to support that bias for that day, and everything else just comes in, as uh, price prints more data. Um, but yeah, does that answer your question, bro?
Yeah. The reason I ask is when in my when I'm working, right? My practice,
Yeah.
I am not like a lay down and I'm just gonna adjust a bunch of stuff. I use 5 different tools to figure out what I'm gonna adjust that day. And so I'm used to using all these different tools to confirm. And so I was trying to put it into like a okay, look for this first, just to kind of get structure,
Gotcha, gotcha.
get the repetition going.
So, I'll just kind of quickly do like a higher time frame analysis with you real quick. Um,
Okay.
so starting off the daily, right? What do we want to see from the daily chart? We want to see any higher time frame displacements, meaning is there any CIC? Is there any order block? Is there any fair value gap? In this case, we have a fair value gap, right? So this
Hmm.
is our high time frame displacement that we're framing our trade off of, right? And then we go down to 4 hour time frame, see what we can find. Okay, 4 hour has a few fair value gaps. Okay, and as you can see, what do we do here? We swept this high, right?
Hmm.
Um, and then start creating a swing. So on the lower time frame is when we just kind of, you know, like I said, bro, price is very fractal. So what you see on the higher time frame should make sense on the lower time frame, you know. And so yeah, once we shipped the high, we came down, right, and then we created a range,
Hmm.
right. Once we created a range, price sweeps internal liquidity, and this is a 4 hour fair value gap that we hit, which is this right here, right? See this big
Hmm.
ass fair value gap that we just hit? Yeah. So once we hit the fair value gap, we create that swing, and then on the lower time frame, you want to be confirming all the other confirmation. In this case, we have a 5 minute CIST, right? Slash order block. Oops. So that's my 5 minute CIST, and then notice how once we closed below, came back up to retest uh the inversion, we just start dumping. So let's say you didn't even catch here. You could have caught some around here, off the fair value gap.
Hmm.
See this 1 minute fair value gap?
Hmm.
Yeah, just like that. Like you could have done something like this even, and then targeted the 50% of the range, and would have gotten you about 5R. You risk $100, make $500 per account, and just like it's a it's a very what can I say? Repeated process, bro. You know what I mean?
Hmm.
Nothing's gonna change ever. Like I remember doing a backtest session back in 1970s. Like that was over 50 years ago, 60 years ago. And it was still following the structure of the market. It was still following the logic of what we know and what we use. So
Yeah, Sherm was telling me that y'all did that.
yeah, like straight up, bro. We backed this for a few hours, and then, bro, 50, 60 years ago, the knowledge that we have right now, we could have went back in time and still made money. You know what I mean? It,
Hmm.
it it doesn't change, and so the only thing that we have to watch out for is our emotions, our discipline, and risk management. Like
Hmm.
as long as we keep those three aligned, like, bro, money is gonna be printed because the way we trade is very precision like. It's very logical. So there's really no guesswork. Like if there's things that are less probable that you don't, it's not even worth taking because I promise you, at least once a week, there's a good A plus setup. And realistically, one setup per week and you hold that and it's good. Like that's all you need, bro. Like
Mhm.
realistically, like you could make a living off one trade per week, you know, straight
Yeah.
up. Like that's
So
really true.
how do you, without sitting and staring at the charts all day long every
I
day?
have alerts set. So this right here, uh, you see, oops, wait, what? Hold on. Oh, it's because I'm in replay mode, I think. Yeah, look, you see add alert. So let's say
Mhm.
like I want to. This is my liquidity point. If we sweep this low, I want to be looking for buys. Then I won't get. I will add an alert. You know, and I'll be like,
Okay.
okay, if price comes down to this level, my phone's gonna vibrate, my computer's gonna ring, and it's gonna tell me that okay, price right here, and it's gonna even email me too. So it's like this is a good tool to use. You just like
It's
put
just like, hey, this happened. Check it out.
exactly.
Okay.
Apart from that, I mean, I'm always on the charts, you know. So it's like it doesn't like phase me too much, but it's
Hmm.
definitely helpful to use, especially like if you're busy with what you're doing. Yeah, 100% I would utilize this. Um but yeah, apart from that, I would say today call, it's kind of like a basic overview of how we can frame our trades. But
Hmm.
do you have any other
No, it's
questions?
helpful. No, it's super helpful. I'm definitely gonna have to go back and rewatch this. Uh, but it makes sense right now.
Yeah.
It makes a lot of sense. It gives me the confidence to be able to go into the charts and kind of test and draw this out and see what it does.
Oh yeah, for sure, dude. For sure. And yeah, it's just back testing is always good. Forward testing is even better. Just so, you can actually like wait and not like uh skip through all the candles like when you're back testing. So maybe, coming this week, Monday, you could open up a demo account and then start forward testing on the live markets, just to
Mhm.
kind of like test out okay your abilities, what you've learned so far, like use it real time, and
Right. And I think I need to get the real time data. I think it's the CME group, right?
yeah, CME group, yeah, exactly.
Okay. Yeah, I need to get that.
Billing. Yeah, this is what I have. See,
Okay.
you don't have to get this, but yeah, I have the CME mini.
Okay.
I think you do need essential, but I chose annually. You don't have to choose annually. Um, but
Yeah,
yeah,
Adrian was saying to wait till if I'm gonna do annually, wait till Black Friday.
yeah, because I bought this on Black Friday. I got it cheap.
Yeah.
But yeah.
Yeah, because
Uh,
I'm on the basic right now, and I he was sitting there trying to help me copy over his chart, and I was like, I can't. I was like, I'm so limited with the basic one.
yeah, it really is, dude. Um, but yeah, man, like, would you say like you're pretty satisfied with the call today?
Yeah.
For sure, for sure, for sure. Um, if you have any other questions, let me know, and we'll hop on
Yeah, I
call
got
as
you.
soon as possible, bro. And if you do have questions, just write them in the general section in the group.
Okay.
Um, Me and Adrian obviously will always help you out. But if you want to call, yeah, just message me and we'll hop on call.
Okay.
What else? What else?
Yeah, I'm excited to start. I have been wanting to open a demo account.
Oh yeah, dude, I promise you, like once you gain the confidence and hang of it, you would kill it, bro. Um, yeah, it's just a matter of time, man. And keep
Yeah.
in mind, bro, we get paid to wait, right? So
Right.
90% of the time you will be waiting, especially when you try. live markets, not back testing. It's
Hmm.
yeah, but it'll go by fast. Time will go by fast, bro. I promise. Um, and yeah, as far as today's call, I think that's it for today. So I'm gonna stop recording right now.
Okay.